This is going to be a hopefully a quicker video than the last one. Chapter 2, I went through the whole process of recording in the serial problem, the October and November transactions. In this video, we would record the transactions for December and then the adjusting entries based on this information. So I'm going to go ahead and record the transactions, but I'm not going to show that part of it. I'm just going to go ahead and do that myself to save you guys a little bit of time. So briefly, I've recorded all these general journal entries. Advertising expense paid for with cash, repairs expense paid for with cash, received cash on account, so they owed us money before. We'd already recorded the revenue before. Now we're just moving it from accounts receivable to cash and out of accounts receivable. Wages expense, paid wages for cash. We received some cash for work we're going to do in the future, so it goes to unearned computer services revenue, which is a liability account. It's not a revenue account. It's a liability account. We owe them that money back, or we owe them completion of the work we told them we would do. We purchased computer supplies on account, on credit. The other one, we sent somebody a reminder to pay their bill. Not an entry, not a financial entry. We completed a project for cash, debit cash, credit revenue. We got some more cash on account from somebody else. We paid mileage expense, debit expense, credit cash, and we paid dividends, debit dividends, credit cash. We'll just check my work right quick, see how many I've got wrong. I kind of rushed through that. Looks pretty good. The next thing we're going to do, and I would rather we didn't do it this way, is we're going to record things we're going to make adjusting entries. So before I do that, what I want to do is I want to go over to the general ledger, and I want to go ahead and post all these transactions that I've already done in the general ledger, and that will give me my balances here. So I'm going to post a couple of them just for the fun of it, just to show you what I'm doing, and then I'll post the rest of them off camera. Advertising expense debit, credit cash for $9.85 on December the 2nd. So advertising expense, second, $9.85. I'm just going to check those numbers. In fact, I can check right here. Here we go. It was debit to advertising expense, credit to cash, $9.85. My back and forth not working. And you see my balance is changing. The next one is a debit to repairs expense and credit to cash for $440 on the 3rd. Computer repairs expense, 3rd, $440, 3rd, $440. See the debit and the credit happening. And one last one, debit. We got cash from accounts receivable. So debit cash, credit accounts receivable on the 4th, $48.50, $48.50. And it's important to check those dates and make sure you got everything right, because that's how you're going to find these entries if you're in the general ledger. Okay, I'm going to post the rest of them off camera. So I've taken all these first entries, the transactions for the month, and I've gone ahead and posted them to the ledger. Now that I have these, I can take these balances, 50,000 here, 5,000 there, and create myself a trial balance and I can use that trial balance to make my journal entries if I want to. I don't have to, but it's something I like to do. But let's do it this way. We can go to here. We can go to the adjusting entries now, and we can figure out what we're doing. This is where it gets important to have those balances. It says that the December 31st inventory count of computer supplies shows $630 still available. $630. Well, my balance in computer supplies is $4,045. That's what I've got on paper, but I've only got $630 in the computer supplies closet. So 404. My balance should be $630. What's the difference? The difference is $3,415. So I need to credit this account $3,415 and then to debit another account. And remember, an adjusting entry always affects a balance sheet account and an income statement account. So if I'm going to credit this account, I'm going to debit an income statement account, and that's going to be an expense. So I'm going to credit this account for $3,415. I'm going to debit computer supplies expense for that. Watch. Let's try again. Computer supplies expense, $3,415. We're going to credit computer supplies, $3,415. That's going to be my adjusting entry. 3 months have expired since the 12-month insurance policy premium was paid. So I can go over to my trial balance and look at prepaid insurance. Not my trial balance, but my ledger. Prepaid insurance has a balance of $2,100. It is a 12-month policy, so $2,100 divided by 12 months. That's $175 of this prepaid is going to become an expense every month. Well, I haven't made any adjusting entries in 3 months. 3 months have expired. It's $175 per month, so that gives me $525 is my adjustment here. I'm going to credit this account for $525, and I'm going to debit an expense account. I'm going to debit insurance expense, $525. Let's see. $3 months have expired. We said that was $175 a month, $525 total. So we're going to have insurance expense, $525, credit prepaid insurance, $525. Record the entry. This one, I think I need to record that one. There we go. Lynn Addy has not been paid for 4 days of work at $105. So 4 days of work, $105, that's $420. So that's going to be wages expense, $425. No, $420. 105 times 4, $420. And it's going to be wages payable, $420. We don't use accounts payable for wages. Taxes, wages, and interest all have their separate payable accounts. Maybe there's one more, but I can't remember what it might be right now. Computer system acquired on October the 1st is expected to have a 4-year life with no salvage value. Well, go here, computer equipment. Computer equipment, $22,400. 4-year life, $22,400 divided by 4. That means we'd have $5,600 worth of depreciation every year. Divide that by 12 to get the monthly depreciation. 600 divided by 12, and I get $466.67 a month. Well, we bought it on, if you go back to our little sheet here, we purchased it on here it is. We purchased it on October the 1st, and we're now on December the 31st. So all of October, all of November, all of December, 3 months. So I want to take that $466.67 per month, multiply it by 3, and I come up with $1,400 worth of depreciation. Depreciation is an interesting adjusting entry. We're going to debit an expense, and it's going to be depreciation expense, and it's for computer equipment, $1,400. The credit is not to an asset account. You don't credit, like I said in one of my previous videos, you can't adjust a long-term asset, but you do adjust the contra asset account, the accumulated depreciation. And I got this wrong. Depreciation expense, there we go, that's what we want. And we want to credit the accumulated depreciation account for computer equipment. That's always the way you're going to see a depreciation entry done. It's always debit depreciation expense, credit accumulated depreciation. And accumulated depreciation always is related to a specific asset account. Accumulated depreciation computer equipment, accumulated depreciation office equipment, accumulated depreciation buildings would be right with the asset that it is a contra asset for. So there's that. The next one says the office equipment, October the 1st, 3 months again. We bought it October the 1st. We're at the end of December. 5-year life. Office equipment, $8,100 is the cost. Divided by 5, I get $1,620. Divided by 12, that's $135 a month. For 3 months, it's $405. We're going to do the same entry here, but we're going to use a different accumulated and a different expense account. It's going to be depreciation expense for office equipment, $405. Accumulated depreciation office equipment, $405. All right. You notice enter the debits before credits always. Sorry for that short glitch. 3 of the 4 months of prepaid rent have expired. So if we go to our ledger, we see prepaid rent has a balance of $29.40. 2940 divided by 4 gives you the monthly amount, times 3 gives me the total. So $29.40 divided by 4 is $735 worth of expense, rent expense every month. And since we're recording 3 months of that, that total is $2,205. $2,205. Is going to be rent expense, $2,205, and prepaid rent, $2,205. All right, that should do it. Let's just check our work. Very good. So I'm going to go ahead and I'm going to post these guys to the ledger again, and that will get my ledger all cleaned up and current with the new balances. So I'll show you one. I'll just post computer supplies expense and computer supplies. You notice an adjusting entry does not include cash, does not include any of the long-term assets, does not include common stock or dividends. They always include an expense or a revenue account and an asset or a liability account. So that's always the way it goes. Let me record one. We'll record computer supplies expense and computer supplies. It's all on the 31st for $3,415. And I'm just going to go make sure that number is right. 3,415. And the credit is going to be to computer supplies. All right. And you notice the balance now is $630 in computer supplies. Let's go back and just look at this real quickly. If you look at this transaction, it says the inventory count shows that computer supplies of $630 are still on hand. And And now my balance in the computer supplies account matches that. That's what we're trying to do. That's why we're doing adjusting entries. Okay, I'll stop and post the rest. All right, now I've got everything posted to the general ledger. I'm just going to check my work here. And I'm bad to miss dates. So accumulated depreciation, of course, this is December the 31st. I just didn't look carefully at the date, which is my fault. Not the way I try to tell you guys to do it. There. I know an adjusting entry is going to be the last of the month, but I just picked up the first date. So check my work. We should be good. Now what I've done is I've taken all these numbers, these final numbers, 50,979, 5168, and I've put them in a trial balance for the fun of it right here, and just made sure that my balances, that I do balance. Here I've added them up, put all the debits and the credits in the right columns, and it works. So I feel pretty good about it. You notice that all the assets have debit balances. The contra assets, these two, accumulated depreciation, have credit balances. The payables have credit balances. That's 3 of them. Accounts payable, wages payable, and unearned revenue. Common stock has a credit balance. Retained earnings should have a credit balance, but doesn't have a balance at all. Dividends will have a debit balance. Revenues will have a credit balance, and all the expenses will have debit balances. Now I've highlighted these in yellow. This is my income statement. So I could take my income statement and that would give me my net income. My revenues minus my expenses equal net income. So here's my revenues minus all my expenses, net income. There may be some noise in the background for the next few minutes. Got some company that just came in. But let's see. Let's go back over to our problem here. There we go. And let's get this thing, see what we can get finished here. We've done the general ledger. Now we've got the adjusted trial balance, which I can do pretty quickly. Sorry for the noise in the background, and some of my family has come in. Okay, cash 50,979, 5168. Oops. 630, 1575, 735, 8100, 405. Remember that the accumulated accounts or contra assets have a credit balance. Okay, I'll finish doing this offline. Okay, it's going to be too noisy to finish this up, but I just thought I'd check my work. All I've done is just enter all these numbers. And there we go. That looks good so far. The next thing we're going to do is an income statement. And an income statement is just going to be this right here. This is my income statement. Revenues minus expenses. I did the same thing by just taking this and just typing it in here as quickly as I could. Check my work and let's see what it looks like. Ah, I like it. So far, we're good. No, this is, remember, you're probably going to have to put a date in here. They put the date in for us. Most of the time, we're going to have to put a date. This is for the 3 months ended. A balance sheet will have just a moment in time, like December the 31st. Statement of retained earnings. We'll show you that in just a second. Again, from the adjusted trial balance, it's easy to get these numbers. Retained earnings at the beginning of the period was 0 because it's a brand new company. We're going to add our net income, $24,462, and I need a title there. I would put a title, but I don't think they want one. Okay. And then you're going to subtract dividends, and the dividends up here, $7,400, and that gives us. What that does is think about what it's done. We've taken all these expenses, all the revenues, and the dividends, and we've rolled them into one number, $17,062, and that is going to be my new retained earnings. That's going to be this balance. Then I can do a balance sheet, and the balance sheet will only be from cash down to retained earnings because we'll have all these other numbers that have been accumulated into this one number for retained earnings. Okay, so here we go with the balance sheet. I've taken cash, and you can see right quick here how I did this. Oops, shoot, fire. Let's try again. This guy here. All I've done is taken cash and put it over here, and accounts receivable and put it over here, and computer supplies and put them over here. I've gotten my total current assets up here, then the plan assets, office equipment, accumulated depreciation. You don't have to put a negative sign there. It's going to be subtracted anyway. You may have to do in the future know to subtract it, but in this case, it's doing the subtraction for you. And so the book value of office equipment is the office equipment asset account minus the contra asset account. Give me that total. The book value of computer equipment is the asset minus the contra asset. Again, give me a new total. Total plan assets, total assets. Now I've put in accounts payable, wages payable, unearned revenue, total liabilities, common stock, and I don't have retained earnings yet, so I'm just going to go over here to the retained earnings statement, 17,062. Let's see if we work out right. 87,782. I feel really good about that. Assets equals liability and equity. Just notice these totals: total liabilities, total equity, total liabilities and equity, total assets, total plan assets, total current assets. All those are very, very, very common. And let's see. Looks like we're in pretty good shape with that. Now we want to close the accounts, and we'll get to that in a little bit. Okay, to close the revenue accounts, there's 4 steps to closing the accounts. Close the revenue accounts to income summary. Close the expenses to income summary. Close the income summary to retained earnings, and close dividends to retained earnings. In closing the account means if the account has a credit balance, we debit it and credit income summary. If it has a debit balance, we credit it and then debit income summary. So we're going to close the revenue accounts. There's only one, so it's, let me just call it revenue here. Computer services revenue. We're going to debit that account, $49.49. We're going to credit income summary, $40,949. And that's closing. There's no more revenue accounts. That's it. So we're going to record the entry. Now we're going to credit. We're going to credit each of the expense accounts and debit income summary. Well, the total expenses is $16,487. Thank goodness I did that. Let's try again. Income summary is $16,487 debit. Now we're going to credit each of the expense accounts. Depreciation expense, $405. $1,400. $3,550. Insurance expense for $525. Rent expense for $2,205. Oops. We're doing supplies expense $3,415. Advertising expense $2,703. Mileage for $859. Miscellaneous expenses $180, and repairs for $1,245. And I think that's right. I hope I got them right. 14, 3, 2, 14. That looks right. So we're going to record that entry. Now what we're going to do is we're going to close income summary. Well, income summary, the income summary account has a balance of $24,462 because I credited income summary for this amount, debited income summary for all the expenses. So now my balance in income summary is $24,462. It's a credit balance. So I'm going to debit income summary for $24,462, and I'm going to credit retained earnings for $24,462. And that should clear out all my revenues and expenses. They now have zero balances. These accounts have zero balances, and so does the income summary. Now we just need to do the dividends account. It has a debit balance, so I'm going to credit retained earnings. The debit retained earnings for $7,400 and credit dividends for $7,400. So everything from dividends all the way down to the last expense are turned into zero, and that number is now in retained earnings. Well, let's see how close we are on this. See how many mistakes I've made. Oh darn! I'm sure y'all saw that when I was doing this. I was trying to get the expense account, and I grabbed depreciation expense computer equipment. There we go. That should do it. Going fast makes you slow because you have to go back and correct things. Last thing we need to do now, this is just look at the general ledger. All the closing entries are done, and just you can just see here. We start with dividends, got a zero balance. Revenues have a zero balance. All the accounts have a zero balance. And the last thing would be a post-closing trial balance. And the post-closing trial balance is going to be simple. I'll let you guys do it. No trouble at all. All you're going to do is you're going to have we're going to have 17,062 in retained earnings. Oops, let me just get rid of that. Let's take this whole thing. The post-closing trial balance. 24,462 minus 7,400, and then take these guys out. My balance is still going to balance. I'm still going to get the same effect with both columns balancing, but my post-closing trial balance will just be the permanent accounts. It won't contain dividends, revenues, or expenses. That's going to be the post-closing trial balance. Come on now. There we go. And so that's what you'd put over here. That's going to be those things. All right, I'm going to close this up and call it good. Thanks for watching.